Hello and welcome to my channel. I'm Brent Bowers, and this little area here is my money. It is no secret that there has been an interesting movement in the markets as of late between the CEO of investing memes Wall Street Bets and their hedge fund counterparts over at Citadel. Ever since the great GameStop squeeze in early 2021, there's been a battle ensuing between the Wall Street Bet boys over on Main Street and the hedgies over at Wall Street, and the battle has been continuing on multiple fronts ever since. However, this prompts a very important question. Are you part of the Great Ape movement? Or are you with the hedgies? Now, regardless of your answer, this has provided investors across the land with some very interesting commentary.
The stock is over 50. $5 price target, stock's at 50. Square the dots.
So if you want to believe in AMC long term, based on what you're seeing happening in retail and entertainment, what does AMC have to become?
74% gain for AMC as I look at my fact set over here. 76%.
Yeah. What people have been saying up to this very moment in time is a type of tug-of-war, and it's fair to call it that, between the buyers and sellers of AMC Corporation, looming and shadowing over the pending short squeeze. Of course, this isn't the first time we've seen this. There were events like the 1901 North Pacific Railway, the 2023 Piggly Wiggly, the 2008 takeover of Volkswagen by Porsche, the 2012 Herbalife crisis, and of course, the 2020 Tesla rally, and the most recently 2021 GameStop saga. Big question is AMC gonna be the next big short squeeze? Short answer, I hope so. Long answer, I hope so. Now, why would a fundamental analyst like myself ever get involved in the AMC drama? Well, simple answer, because of its ability to make money. Never underestimate the group of people willing to make money and to sniff out lies and corruption. The entire idea or mindset behind the AMC movement is becoming more and more polarized, simply because the population behind it is split into two different groups. On one side, you have this entire group of people who use a lot of fundamentals to tell you about AMC and its inadequacies. On the other side, you have this group of people who are simply there because of a pending short squeeze, something nefarious and something shady. And they of course would say things like,
But the valuation of AMC is way beyond this fundamental level.
Of course it is, but that's not the point. You see, the valuation of AMC and its ability to go higher and higher is not really contingent upon a balance sheet or statement of cash flows. A perfect example of this happened in the Dutch Republic during the 1600s. You had that tulip mania situation go down, where individuals were actually leveraging their houses because of the tulip bulb's perceived value to be more than anything in the market, including real estate. Now, the idea here is the new millennial money, millennial finance, millennial investing type of philosophy, where you hop on board and move the price with the crowd, so to speak. The hop on board and hope for the best type of philosophy. Diamond hands and YOLO bets aside, that's actually not a bad strategy. Now hear me out. Now before I get over to the Citadel and AMC part of the video, I wanted to bring this up really quickly, is that ever since the beginning of the stock market, open cry auctions were like the thing that you did. That was the way that people were investing in the corporations, to having trades being done. It wasn't entirely uncommon for a large groups of people and institutions to hop on board, so as long as there was enough consumer sentiment moving in one direction. This is very, very similar to what AMC is currently going through and what they could potentially go through during a short squeeze. Investing is actually no different. You see, investing collectively over the last 50 years has changed dramatically. To kind of springboard off of my other video that I mentioned, the advancements in technology that make it very, very easy for users to find out a lot of things about consumer sentiment, price movements. They don't necessarily have to look at a company's 10K or 10Q to find out where the momentum is and hop on board and make some money. Now, back over to AMC, the main reason why I believe this company is garnering so much attention and gaining so much energy is because of something nefarious going on with Citadel and the DTCC, and rightfully so. There's a great deal of evidence that actually points to it. Take this one example, the Apex Clearing Corporation and its relationship to Northstar Investment Corp with its proposed sales of securities. The total preliminary prospectus in this particular case is well over 400 pages long, and I cannot possibly dissect it all. However, there are certain areas of this document that are more important than others, more specifically the business of Apex FinTech under the section Legal Proceedings on page 186. Take a look for it for yourself. Within the SEC archives, this document has also been circling around Reddit a few times. It is very, very interesting to look at. The scary part in all of this is that this isn't one faction claiming antitrust violations. This is something much larger. There are 6 other separate lawsuits claiming damages against brokerages involving some big names, 2 of which I'm pretty sure you've already guessed. Now, I will be posting a link in the description box below, so you guys can go ahead and click the link and research this for yourself when you have some time. It's under the chapter Business of Apex FinTech on page 173 to 190. It's very interesting to read this. I think it's in the legal section, but don't quote me on that. Now, I don't want to bore you with the entire thing, but long story short is that the plaintiffs in these particular cases are claiming corruption and antitrust violations for collusion with the DTCC and certain hedge funds to keep them from losing money against meme stocks like GameStop and, of course, AMC. I do believe that this is a believable document and believable situation simply because of the GameStop drama they had with Robinhood. In conjunction with this, I believe collusion is even more probable when you take into consideration that one of the current sitting board members for the DTCC is actually part of the global head of operations for Citadel. Now, I'm just going to leave that there for you guys to decide, but that's just what the evidence is showing me. Next, we have the evidence that the number of shorted shares have been manipulated through a practice called naked shorting. Now, naked shorting is illegal because the number of shorted shares have not yet been determined to actively exist in the market. And the reason why investments, funds, and hedge funds and individuals would like to pursue this type of practice is to show an artificially lower sentiment for selling than there actually is. Now, this type of action actually shows a larger degree of negative sentiment towards a particular stock. Now, the reason why hedges would want to do this or engage in this type of activity is to attempt to scare or beguile AMC holders to prematurely exit the market way before they're supposed to. This is especially predominant for hedge funds, especially if there's billions of dollars on the line. Okay, so how do we know that there was naked shorting to begin with? Well, one example is the segment on CNBC where the anchor was actually involved in conversation with a few other financial individuals where she actually disclosed an assumption that there could be naked shorting happening with stock currently on the market, especially in response to AMC. And the expression on her face when she said that was a bit confusing and interesting to say the least, because that's pretty huge if they all agreed all at once that there could potentially be naked shorting involved.
There's a lot of people, there are a lot of short sellers out there that have been borrowing stock they didn't have. In other words, yes, I think there are dynamics where retail investors can get caught, but it's really a dynamic where I think this is going after bad companies.
Secondly, AMC shares have been returned in record numbers, or failed to delivery, or FTDs. The reason why this is a big deal is because the buyers and sellers of AMC must have an agreement. So the sellers of AMC must have the actual shares to sell, and of course the buyers of AMC must have the money to buy it. And in this FTD situation, one of them broke the promise, usually the people selling the AMC stock. In the case of AMC, the record number of funds failed to deliver for AMC were particularly high, the highest that they've ever been at 122 million shares returned. Now you can go ahead and check that out at the SEC main webpage for FTD of AMC. And finally, if this isn't slightly convincing enough to let everybody know that there's some sort of collusion going on, consider the following. Every single time you look up AMC stock on a main financial news source or a financial blog, you're always consistently bombarded with, you should definitely sell AMC before everybody else does, or the stock is going to the floor, or it's not a legitimate business, it's AMC's a meme stock. It's stuff like that that actually kind of reinforces that there could be something nefarious going on, and there's definitely an attitude from the mass media to scare people out of this position. Now, personally to me, I find it a little comical that these two factions have kind of a general consensus towards each other. More specifically, the hedge fund boys actually believe the Wall Street bet apes to be completely incapable of performing due diligence when it comes to modern day stock analysis and to sniffing out nefarious, schemes, potential nefarious schemes. Yes, there's dumb money involved, but that's been the case for every single stock that has ever been traded on Wall Street. I also find it interesting that the big financial media, they never bring up dark pool data. They rarely bring up collusion, and they never bring up naked shorts. I find that particularly interesting that the big media that they have their hands involved with are just spreading panic and fear on Main Street. I think it's particularly interesting that the big media who's covering AMC and GameStop and meme stops, they never tend to bring up dark pools. They never tend to bring up potential corruption. They never bring up naked shorts. And the other blogs and financial media sources that these big media sources have their hands in never talk about collusion, which is a bit strange to me. The one thing to point out is that AMC didn't get to 70 a share by paying attention to the mass financial media. GameStop didn't get to 480 a share by the financial mass media. That's just something I found to be particularly interesting. If the hedge funds and the big media outlets that they have their hands in are so star-spangled awesome, then why they lose billions of dollars to a bunch of apes? Now, I'm just gonna leave that there for you guys. That's it for this particular video on AMC. I might do another video on AMC. However, if you are a buyer or seller of AMC, make sure you understand the risks involved in the stock market and make sure you're doing your due diligence and you're performing your analysis and making investments that make sense for you specifically. I'm Brent Bowers, this is My Money, and I will see you guys in the next one.